Welcome to another episode of Deep Dive into Real Estate by Team Luddy Dillon. This is the place where we simplify real estate for you, one topic at a time. Enjoy.
So you're likely here because you want to get past all the noise surrounding the recent Canadian election. You want to know what it really means for housing, for the economy, for you. Forget the headlines for a moment. We're going deep into the analysis, pulling out the key takeaways about what might actually change.
Exactly. We're looking at the potential ripples.
Yeah.
How this could affect the housing market, whether you're trying to buy, thinking of selling, or maybe you're an investor. And then critically, how that connects to the bigger economic picture. Things like trade with the U.S. and what's happening with jobs.
Okay, let's dive straight into housing then. The government's talking a lot, about building more homes. Sounds good on the surface, right? More supply, lower prices. But what does the analysis actually say about the timeline?
Yeah, that's where it gets interesting. When you dig into the projections, the scale of just building enough is huge. Even if they hit all the targets, there are bottlenecks.
Yeah.
Supply chains, finding enough workers, just the sheer time it takes to get projects approved and built. It means we're realistically looking at several years before we see enough new homes to really shift prices significantly across the board. One report we looked at suggested maybe not until, say, late 2026 or even later for that kind of market impact.
Right, so the intention is there, build more houses, great. But if you're hoping for prices to drop like a stone next month because of new supply, probably not happening. Okay, what about help for first-time buyers? There was specific talk about a GST break on new builds. How much difference could that make?
Well, on paper, it could be pretty significant, the GST rebate, I mean. If you're looking at, say, a brand new $800,000 house, the savings could be around $40,000.
$40,000? That's not insignificant.
No, definitely not. That could be a huge help towards a down payment for a lot of people starting out.
But there's always a but, isn't there? Who actually gets this? Are there catches?
That's the crucial part. It's specifically for new homes. So if you're looking at resale existing houses or condos, this particular break doesn't apply.
Ah, okay. New builds only.
New builds only. And maybe even more importantly, especially right now, you still have to qualify for the mortgage itself. The GST break helps with the sticker price, sure, but it doesn't magically increase how much the bank will lend you.
Which, brings us to the wider economy. We've seen unemployment tick up a bit, haven't we? How does that play into this for buyers?
It's a really key dynamic. So even if you could save that $40K on a new build with the rebate, if unemployment is rising or if your own job feels less secure, well, your ability to actually get approved for that mortgage becomes tougher. Job security is fundamental for buying a house.
Makes sense. Worry about your job, maybe hold off on a massive purchase like a home.
Exactly. So the GST break is helpful, but rising unemployment can kind of cancel out some of that benefit by making it harder to borrow in the first place.
Okay, let's shift perspective. What about people who own property as an investment? Landlords. What's the outlook there?
Well, right now, in a lot of the big cities, it's still a landlord's market, isn't it? Rents are high, vacancies are super low. Toronto, Vancouver.
Yeah, very tight.
But tying it back to that push for more supply, if over the next few years more rental units do come online, that could eventually mean more competition. Maybe rents don't climb quite as fast. It introduces a potential headwind, let's say.
And didn't the analysis also mention potential new rules or taxes for investors?
Yes, that was flagged as a possibility. The details are obviously not set in stone yet, but any new policies aimed specifically at property investors could be taxes, could be regulations, might make some rethink their strategy. Depending on what those changes look like, of course, it could potentially cool investment demand a little.
So for renters then, any light at the end of the tunnel in the near term?
For renters, the potential good news is linked to that same supply increase. More homes being built eventually should mean less competition for rental spots. Maybe slow down those rent hikes.
But that eventually is doing a lot of heavy lifting there.
It really is. We have to stress that timeline again. Building takes years. So immediate, widespread relief on rents, unlikely. It's a gradual process.
Okay, so housing doesn't exist in a vacuum. It's tied to the whole economy. Let's talk about those broader factors. Our trade relationship with the U.S., potential Trump tariffs, stuff that keeps coming up. How much does that actually matter for housing here?
It matters quite a bit, actually. The overall health of the Canadian economy is, well, it's a fundamental. Uncertainty about trade, especially with the U.S., our biggest partner, that can make businesses nervous. They might hold back on investing, on hiring. If companies are worried about tariffs hitting their exports, that can lead to job insecurity or even job losses.
And that loops right back to people feeling confident enough to buy a home.
Precisely. Those big trade issues aren't just abstract numbers. They filter down to consumer confidence, to job security, and ultimately to whether someone feels ready to take on a mortgage.
And the unemployment rate we mentioned earlier.
Yeah, rising unemployment is a direct drag on the housing market. Fewer people working means fewer potential buyers. Plus, even people with jobs might get more cautious about taking on debt if they see neighbors or friends losing theirs. It just dampens demand.
Okay, so we've got government plans, supply issues, interest rates, jobs, trade, a lot of moving parts. Bringing it all together, what are the experts actually predicting for home prices? Where are things headed in the next year or two?
The general consensus looking across the analysis seems to be relative stability, nationally speaking, in the very near term. For 2025, the baseline prediction is mostly flat, maybe a slight dip nationally, like around 1% down on average.
Flat or slightly down for 2025.
Yeah, okay.
But maybe a change looking further out into 2026.
Yeah, the outlook for 2026 looks, let's say, cautiously more positive. But it really depends on two big ifs. If interest rates start coming down, making borrowing cheaper, and if the overall economy picks up steam, then we could see a bit of a recovery in prices. The forecasts suggest potential national growth maybe in the 3 to 5% range for 2026.
Right, but Canada's housing market is famously not monolithic. Huge differences region to region. What are we seeing there?
Oh, absolute critical point. The regional picture varies a lot. Ontario, especially around Toronto, where prices went up so much, that area might see some further softening or downward adjustment before things level off.
So maybe still some room to fall in the GTA?
Potentially, yeah. Whereas places like Alberta and the Prairies, where affordability is still relatively better, they might actually see stronger price growth. There's still demand there.
Interesting. And Quebec?
Quebec is expected to be more sort of steady, moderate growth, but probably not dramatic spikes, just ticking along.
Okay, so if you're listening and trying to figure out what to do, let's break down the advice. If you're thinking of buying, what's the takeaway?
For buyers, I think the main thing is managing expectations.
Huh?
Don't bank on huge price drops happening immediately. The data points more towards gradual change. But the upside right now, you probably have more choice, more inventory on the market than a couple of years ago, less frenzy. And if interest rates do come down later, that helps affordability. So maybe the advice is take your time, look around, don't feel pressured.
Good advice. What about if you're on the other side thinking about selling?
Sellers, especially if you're in one of those competitive city markets where more listings are popping up,
Yeah.
you need to be realistic about your asking price.
No more naming any price and getting it.
Probably not in most places, no. Do your homework on what comparable homes actually sold for recently in your neighborhood. Price it strategically from the start.
And finally, for investors trying to navigate this,
For investors, it's probably prudent to keep a close eye on any policy changes, like those potential new rules or taxes we mentioned. Be aware of that. But at the same time, the underlying demand for rentals in most major Canadian cities is still fundamentally strong. That hasn't disappeared.
so pulling it all together, the big message seems to be patience. We need to wait and see how a lot of this plays out.
Patience is definitely key, yeah. The election signals a plan for housing, but building homes, shifting markets, that takes time. It's a long-term effort. Lower interest rates will help when they come. But the main thing everyone's talking about, more supply that's measured in years, not months.
So it sounds like we're probably heading into a market for the next year or two anyway that's maybe a bit slower, steadier. But with those regional differences really mattering, what's happening in Calgary isn't what's happening in Toronto.
That sums it up well. So whether you are looking to buy, sell, or invest, the best thing you can do right now is stay informed. Watch what the government actually does. Keep track of interest rate news and really understand your specific local market conditions.
Okay, so the key takeaway from this deep dive. The election might set things in motion, but don't expect overnight miracles in the Canadian housing market. It's a long game, focused on boosting supply eventually. And in the meantime, the economy, jobs, interest rates, those are still huge drivers.
Which leads us to maybe a final thought for you to chew on. Given that these big dramatic market shifts seem unlikely in the immediate future,
Yeah.
How does that change how you think about your own long-term financial planning? Does it mean maybe shifting focus away from trying to perfectly time the market for a quick win and more towards building a financial strategy that's resilient, sustainable, designed for a housing landscape that might just be slow and steady for a while?
Don't forget to subscribe to our channel. We will be back with something new and something interesting.